Hello, everyone. Welcome back to Go Broke Investing, your one-stop shop to teach you everything that you need to know about the basics of investing. Today, we're going to be talking about compounding and how it's an effective tool to really grow your portfolio. And this is really just a long-term strategy for anybody who's in it just looking for something that they want to grow over time. Compounding is going to be 10 times better than any savings account that you have. So let's talk about how compounding works as far as the world of investing is concerned. So the first thing we need to know is, what is compounding? Well, in finance, compound interest simply means that instead of taking out any earnings you make from interest, you leave it inserted, effectively earning interest on interest. So how does that work with investing, though? Well, in the traditional stock market, dividends are paid out. And in crypto, there is deFi that you can use or staking tools. So these things effectively allow you to leverage whatever money you have to compound over time. So I'm going to cover the stock portion, and Jiz is going to cover the crypto portion. All right. So what is a dividend? The best way to explain a dividend is it's a sum of money paid regularly, typically quarterly. Some stocks do pay monthly. Not a lot. It's not really a known thing, but it's by a company to its shareholders out of its profits. So when we look at a company like Apple, they pay a quarterly dividend. And so let's go ahead and do a screen share. All right, can you see my screen?
Yep. Good.
All right. So when we look at like a company like Apple, we can see all their that they pay quarterly and the amounts that they pay quarterly, and that's broken up as a yield. Now the yield is really just the percentage of whatever their stock was at the time and what they decided to pay. And so to get the annual yield, you would add all these together. But each quarter they paid about 20 cents, a little bit between about 0.2050 cents. Well, if you're in Apple stock and you enroll in what's called a DRIP or a dividend reinvestment plan, every time that Apple pays a dividend, you would then use that dividend to repurchase a fraction of the stock. And so this dividend, one thing that's important is this 20 cents is per share. So if you have 10 shares, you're going to multiply that 10 times this number. And let's say that's $2, right? You're going to get $2 worth of stock at that time. It's going to reinvest and purchase $2 in stock worth of stock as a fraction. Well, why is that important? Because as that fractional stock appreciates, that $2 turns into $5 or $10 over time, over maybe a year or something like that. So this is what we talk about as far as compounding. It's one of the top things to do if you have a long-term strategy. It's something that Warren Buffett highly suggests, and a lot of people highly suggest. So with that being said, let me jump back down here. You want to look at things like that if you're in this for a long-term strategy. And when we talk about crypto, the thing that makes it so unique is their compounding is, in comparison to stocks, is so much faster than a stock. So you're waiting a quarter to receive whatever that yield was. Maybe it was 1% or 1.8%. Some are higher, some are lower. and you're going to repurchase that stock. But the intriguing thing about investing is over time, stocks in the stock market go up. So while you're waiting that quarter, that stock could go up. And so you're actually purchasing a lower fractional amount of that stock versus in crypto, when you're either doing a staking or you're lending it out in a deFi for a deFi purpose, you're actually accruing a lot faster. So Jiz, you want to take them through the crypto portion and why it's important? You're on mute.
A couple of things that you said there that I just want to highlight is a lot of people who are not familiar with compound interest, right, is a famous quote from Albert Einstein. It says, compound interest is the eighth wonder of the world. He who understands it earns it. He who doesn't pays it, right? And what he's talking about really is, again, what you're saying is it's a long-term strategy, but it's also safer strategy. Again, you have, if you're new to investing or just investing in general, you want to play it safe, right? So when you talk about people um, wealthy or people who are investing, the most important thing is protecting your capital. You do want to grow your money, but you don't want to risk what you already have. So if you're able to maintain what you have and then build upon it, that's where you see, the best earnings from it. So this is a good website for you to check out. It's called stakingrewards.com. And when you go on the site, you can click on the top where it says calculator over here. And then you can select which currency, which crypto that you're interested in, seeing how it can help you and invest in it. So we have this crypto, is Algorand, a very good project. You should do your own research on it. Again, right? So when you come down here, you're able to look at these fields here. So you're going to look at earn. So we're talking about earning. So you have, let's say, $1,000 worth of Algorand, and you can see how it will grow in your account. So we have this for 1 year, and we're going to put this back to current price, right? So the current price, if it grows in 1 year, you're going to have your total rewards of 5.73% is going to grow in your account. You're going to get a monthly earning of 459, but that's also going to be in Algorand. So you're gaining your staking rewards, plus they're going to give you additional coins that you don't have to purchase yourself. So that's very powerful. You're getting extra coins to build your portfolio. Then they're going to tell you the value of those coins if it stays at its current price. So if you want to project it into the future, if you pick your projects correctly, and we did a previous podcast where we talk about how to vet various projects. You may want to check that out as well, right? Let's say the project goes 50% in 1 year, which is not unheard of. 50% is not, an exaggerated or ludicrous claim for a crypto project, right? So you can see the numbers change here. Now we have 5.73% reward rate. You're gaining $6 as opposed to 450 before, and now this jumped up to 86 yearly earnings, right? So let's say again, you're probably going to have more than one coin in your portfolio. Maybe you have one or two that has a really good year, and then let's say this goes 100% in 1 year, right? So again, these are all projections, but we can see without doing anything extra exactly what Leon was talking about, as opposed to stocks where you're going to get that quarterly dividend payment. This is, you're seeing this grow in your account month over month, and then plus the coin itself is growing in value. So you're benefiting from compounding multiple ways in the appreciation of the coin on top of the staking rewards that you're earning from it, right? So when we're talking about the DeFi space, this is the reason why you have top executives leaving hedge fund companies, leaving financial institutions to come and start their own DeFi projects or to come work with existing DeFi projects, because these types of values, they've never seen, some, most of them have never seen anything like it, and it's legal, right? It's not that this is like some type of scam or anything like this is just the way that these projects were created to take advantage of compounding interest. They can't do that in the current financial system with regular stocks and with bonds and with mutual funds, right? So that's why DeFi is so exciting. And 2021, for everything that it's going to be known for, is going to be known for DeFi as well.
One thing that I think that you may ask is, why are they rewarding me?
Yes.
And so like, I know that's always a big question. Well, it's the same thing in stocks.
Mm-hmm.
Why do they reward you dividend stocks?
Mm-hmm.
Well, because they know that if they reward you, you'll hold on to their stock longer.
Mm-hmm.
It's the same thing in crypto. They want you to just hold on to that certain coin because of the power of that coin, or supply and demand, or whatnot. And just like in the stock market, where that yield kind of changes, sometimes these percentages change based on, what project you're holding.
Mm-hmm.
So the thing that I want to get across is, no matter if you're investing in cryptocurrency or stocks, you should be leveraging compounding if you're a long-term strategy. Even if you're like a short-term,
Mm-hmm.
even if you hold it for 3 months,
Mm-hmm.
or you just hold it for a quarter, and that will actually bring me to my next point. You're still getting some sort of reward.
Mm-hmm.
So one thing that I neglected to bring up in the stock portion is that you have to hold it a certain amount of time. And there's these things called dividend expiration dates, where if you buy, like, you could literally buy the stock before the dividend expiry, and you'll qualify for the dividend, and you could sell it, 8-10 days later, you're still going to get that dividend or whatnot. But they tell you to hold it. You have to have it before the dividend expiry. Well, with crypto, there really is no dividend expiry, but it's important to know that in stocks, if you want the dividend, to look at your dividend expiry rates, because say you sell before that date, you're not entitled to that dividend.
Yeah. The one thing,
So
you
yeah.
may want to check, different platforms do have different staking rules. So some platforms, they just reward you, and it's the same thing that Leon said. The reason why this, like certain platforms, that you have different um exchanges, they just want your money in their exchange, right? So to reward you for using them, they're going to give you 5% for Algorand. They're going to give you 12% for a stable coin like USDC, or for Tether, right? Some of them have some rules where they say you have to put it and keep it in your account for 3 months. And if you say, okay, I'll put it in my account for 6 months, they'll give you more rewards, as opposed to someone who puts it in for 3 months. And if you put it in and you lock it in for a whole year, they'll double that. So if you know, like Leon said, it's a long-term investment, I'm not going to touch it. I'm going to buy it. I'm going to hold it. I might as well put it in this exchange for a year. They're going to give me 12%, 25% APY just for holding it, right? You can't do anything better than that. And one of the other things that I definitely want to say is that this is a strategy that the wealthy have used forever, right? They buy, they get into projects, they buy stocks, they get into these vehicles, and they're not looking to sell, right? A lot of people, they're talking about, oh, I want to get the car, I want to do this, I want to do that. Well, the strategy is to get into these projects and these opportunities where you get that dividend, where you get the interest, right? And that's what you're going to live off of, now you have to think about it's like, okay, we're showing you $1,000, but long term, if you're investing and you're growing your portfolio, you're able to turn that $1,000 into $10,000, into $100,000, into $1 million. So if you're getting 5%, you're getting 25%, right? That's the kind of money that you can live off of. There should be no reason for you, because it's selling that investment, you're killing your golden goose. That stock is your golden goose. That crypto is your golden goose.
Would you mind putting in, can you raise that amount? Let's say, you had $5,000. So let's throw that in there. And then let's say, which is not uncommon, we go from very bullish to super bullish, like 500%. This is not uncommon in the crypto world. Okay, so your estimated yearly earning now becomes 1720. Well, your estimated monthly earning is $137. That's some people's cell phone bill, right? So there are people out there, like Jiz just said, if they fall into a large lump sum of money, they drop 5,000, 10,000, maybe you get a bonus and you weren't expecting a bonus. They drop that in there. Why spend that money when you could put it into something like a crypto project or even stocks or whatever? And monthly, you could live off of, you could take half of your rewards and pay bills with it and never have to pull down your money. Yep. never, ever. And so there are people that are living right now off of their rewards, their crypto rewards. Yeah. This was something that kind of blew my mind when I stumbled upon it and started talking to people, and come to find out people invested in coins when they were, let's say, 30 cents. They appreciated 500 to 1,000%, and they're still paying staking rewards. And now they're getting half their salary a year, you know? But again, if we transition back to stocks, Warren Buffett and some of the most wealthiest individuals, this is how they grew their portfolio. They just kept investing, buying more stocks. In turn, that they repurchase more shares, and they're buying those stocks that pay out dividends. And over time, Warren Buffett is a very old man, but over time, it transitions those thousands into tens of thousands. And if you invested 100,000, turns that 100,000s into millions without having to work for it. Yeah. And so with this, even if you split, if you had 10,000 and you put 5,000 in stock market and 5,000 in crypto, now you're diversified and earning rewards. So this is something that just a lot of people don't know that we thought we would cover. I think you said you had one more.
Yeah, just one more example. Just think about this year alone in how many times Bitcoin dropped significantly in its price, right? So everybody was expecting Bitcoin to smash through 60,000, go to 75,000. It keeps hitting a ceiling at around 55,000, and it dropped that one time around 40 something thousand, and then this last week it dropped below 30,000. So imagine you have that in your account, and each time it drops to that level, you get some more, right? So the amount that you have in your account goes up. Whatever APY they're giving still stays the same. And then we know next month, Bitcoin is going to be higher than where it is right now. At the end of the year, I'm pretty confident that it's going to be higher than where it is right now. So that's the thing, is that in contrast to stocks, you may have to wait years before you get another good entry on a dividend paying stock where you're like, I can't wait till that thing drops 10, 15, 20%. But with crypto, we may just have to wait a couple of weeks to a couple of months to get the type of entry that you're looking at so that you can invest more into it.
And I would say that, some of the some of the wealthiest people know this, and some of the wealthiest people are not the get rich quick people.
Mm-hmm.
They're the patient,
Mm-hmm.
and they're going to hold over time.
Mm-hmm.
I saw something about, I forget his name. There was a guy back in like 2013 who was encouraging everybody to buy Bitcoin.
Mm-hmm.
And he said, just buy one and hold it. And he purchased a lot of Bitcoin back in 2013, 2012, and he just held it.
Mm-hmm.
And we've seen where it is. I mean, if he bought 10 Bitcoin back then, it probably cost him $5.70, or maybe it cost him $1,000. But now, where does that 5 or 10 Bitcoin got him?
Yeah.
And so with these new projects coming out, and we can kind of get into this later, you've got places like Coinbase and other places that are saying you don't have to pull down your crypto. We'll let you borrow against it. And that's a whole nother thing, where now I don't have to actually liquidate my position. I can borrow against it and pay interest. And that's where DeFi is really exploding. And let's look at, for instance, Gemini. I like to use Gemini. They pay you, whereas some of these projects pay you for staking, holding on to their coins. Not all projects pay a staking fee, but with companies like Gemini, there's a demand for that coin, and so they're going to pay you interest if you loan it. So you are the bank, essentially. Mm-hmm. So you're loaning out your coins for whatever reason. Somebody wants them, and they're using it, and they're going to pay you interest. But the interest, here's the key part, comes back to you in more of those coins. Doesn't come back to you in dollars and cents. Mm-hmm. So I highly, I don't want to provide any financial advice, but when you look at Coinbase and you look at Gemini, when you look at Celsius, Binance, Kraken, when you look at these places, there are ways to make money on your investments, especially if you're a long-term holder. So that's basically all I got.
Yeah, I mean, it's in your benefit to do some research. And one of the things that we've discovered as well is that many of these coins have their own platforms that created them. So Algorand has their own Algorand exchange or platform where you can buy the coin directly from them. Name any coin and it has its own platform where you can get and stake your coin, and they're usually paying more interest than a traditional exchange. So they're vested in giving you a bigger reward, and it's safer, right? They're the ones who develop the project. They're probably going to want to protect your investment than some random exchange. So of course, do your own research. The exchanges that we did mention, they've been around for a while. I have money and coins in them, but again, use your network, do your own research. This is opportunities, and one of the things I'll end on this note. The DeFi space is quickly evolving. There will always be different ways of making profits from the DeFi space, but one of the things I do believe is that over time, these big rewards that we're seeing right now will diminish, because as more and more money comes into this space, there'll be less of a need for these platforms to give out 10% APY, 20% APY to attract your money. So get in now while it's getting good.
And can you define DeFi? Because I don't know if we did that.
Oh, yeah. So DeFi stands for decentralized finance. So it's a platform. Somebody comes together. It could be a smart contract. It's not even a company. It could be a smart contract where it's pretty much a program that plays out those rules. Put your investment in this vehicle and it will automatically pay you out these rewards or allow people to lend out. So it's mimicking the banking services as far as holding, storing, protecting, payment processing, lending, and all of that stuff, trading and investing, but without any government or financial institution overseeing it and controlling how it's worked. So that's why the DeFi, decentralized, no government or financial institution runs it.
Good. Well, that concludes today's episode. Hopefully you learned something, and for our long-term strategy folks, hopefully you've seen that there are many different options for you. Until next time.
Take care.